thousands of veterans miss out on benefits they're actually eligible for, and many don't even realize it. Right now, there's a guaranteed benefit sitting unclaimed that will hand almost any disabled veteran a $40,000 payout for their family, with no health questions asked.
Not at all.
And the crazy part, you qualify even if your disability rating is exactly 0%. Hello, everyone, and welcome to Veterans Briefing.
Thanks for having me.
Today, we are unpacking a vital but deeply misunderstood program called VALife, which stands for Veterans Affairs Life Insurance.
Right, it's a huge one.
By the end of this discussion, you're going to understand exactly who qualifies, and the net is cast much wider than you might assume. We'll cover the one structural catch you need to be aware of, and the hidden math behind why waiting to apply is quietly, permanently costing you money.
Yeah, I mean, VALife is one of the most powerful tools in the VA arsenal, yet it consistently flies under the radar.
It really does.
The gap between the benefits veterans earn and the benefits they actually use is, well, it's often just a matter of translation. And VALife is a perfect example of a policy that gets lost in administrative translation.
So true. I want to start by looking at the private insurance market, because you really can't appreciate what the VA is doing here until you understand how the civilian world treats a veteran's medical history.
Oh, absolutely.
Because I mean, if I'm a veteran with service-connected injuries and I apply for a standard private life insurance policy, I'm basically walking into a system designed to view my service as a liability.
Right, because the entire private insurance model is built on rigorous risk assessment. When you apply, the underwriters are pulling your medical records, they're looking at the Medical Information Bureau reports, analyzing your blood pressure, your heart history.
Like a full prescription list?
Exactly. They use actuarial tables to predict mortality. So for a veteran carrying documented disabilities, whether that's severe joint deterioration, PTSD, respiratory issues from toxic exposure, your risk profile just spikes.
Which makes sense for them, but it's rough for the veteran.
Yeah. The private insurer isn't looking at your service as a sacrifice. They are looking at the statistical probability that they will have to pay out a claim early.
Which means the veteran either gets hit with a premium, quote, so astronomically high they need a second mortgage to afford it, or the underwriter just flat out rejects the application.
That is the reality for millions of older veterans. They get priced out or denied, and they internalize this idea that they are fundamentally uninsurable.
Hi.
And, what makes VALife so radically different is that it completely inverts that dynamic. VALife is a whole life insurance policy backed directly by the VA, offering up to $40,000 in coverage.
And the defining feature here is guaranteed acceptance.
Exactly. Guaranteed acceptance, no medical exam, no blood tests, not a single health question on the application.
That's incredible. So the very injuries that would cause a private company to stamp denied on your paperwork are entirely irrelevant to your approval here.
100% irrelevant.
But that brings us to the biggest mental hurdle veterans face with this program, which is the eligibility threshold. The requirement is simply that you must have a VA service-connected disability rating.
Right.
But a lot of veterans hear disability rating, and they assume they need to be 50, 70, or 100% disabled to qualify for anything meaningful. But the documentation is clear. You qualify even if your rating is 0%.
Yeah, and the 0% rating is probably the single most misunderstood classification in the entire VA system.
Because veterans get that 0% letter in the mail, and they feel insulted.
Oh, totally.
They read it as, the military admits my knees are shot, or my hearing is damaged from my service, but they aren't giving me a monthly compensation check, so this is just a rejection.
Right, they just toss the letter in a drawer and write the whole thing off.
Exactly.
And, I mean, that reaction is completely understandable from an emotional standpoint. But administratively, it's a massive missed opportunity. A 0% rating is not a denial. It is a formal legal acknowledgement. The VA is establishing the medical nexus between your current condition and your military service.
So think of a 0% rating like laying down the foundation for a house. You can't live in it yet. There's no monthly disability check keeping the rain off your head. But administratively, the concrete is poured.
That's a great way to put it.
The VA has legally anchored your condition to your service, and that foundation is exactly what you need to build this VALife policy on top of.
That foundation is everything. The private market penalizes you for the damage, but VALife uses the formal recognition of that damage, even at 0%, as your all-access pass.
It's like a golden ticket.
It really is. It takes the very thing that makes you uninsurable in the civilian world and turns it into your specific qualification for guaranteed coverage.
Let's talk about the actual payout, though. $40,000. I'm looking at that number. And if I'm, say, a 35-year-old veteran with a spouse, 3 kids, and a massive mortgage, 40 grand isn't going to replace 3 decades of my lost income if something happens to me.
No, it won't. And we need to be very clear about what this financial instrument is designed to do.
Okay.
VALife is not built to be an income replacement strategy for young families. If you're 35, you should be looking at term life insurance.
Like VGLI or private term policies.
Exactly. Policies that offer much higher death benefits, like $400,000 or $500,000 for a lower monthly cost, assuming you can pass the medical underwriting.
So we're really looking at a different demographic here and a different financial problem. We are talking about end-of-life realities for older veterans.
Yeah, we are talking about final expenses and the sudden crushing debt that can fall on a surviving spouse.
Right.
A standard funeral in this country routinely runs $8,000 to $12,000, but it rarely stops there. You have to factor in the out-of-pocket medical bills that pile up during those final weeks in a hospital or hospice, the co-pays, the sudden need for home modifications.
Or the credit cards that get maxed out trying to cover gaps in care.
Exactly. When a veteran passes, the financial shock to a spouse on a fixed income can be devastating.
Having $40,000 tax-free dollars land in a surviving spouse's bank account within weeks of a veteran passing is the difference between them grieving in peace and grieving while sitting at a kitchen table trying to figure out which utility bill to skip so they can pay the funeral director.
The case study of Ray in our source material illustrates this perfectly.
Oh, yeah. Tell us about Ray.
So Ray is a 68-year-old veteran. He holds a 30% service-connected rating. And like a lot of folks pushing 70, he has accumulated some fairly standard health issues over the years.
Right.
A little heart trouble managing type 2 diabetes.
So he decides he wants to take the burden of funeral costs off his wife's shoulders. He sees a commercial for a private life insurance company, makes the call, and goes through the phone interview.
Right. And the underwriter takes one look at the heart history and the diabetes, combined with whatever service-connected injuries he has, and immediately flags the file. They either quote him a monthly premium that is laughably unaffordable, or they just decline him outright. Ray hangs up the phone and assumes the door is permanently closed. He thinks, I'm in too rough a shape. I'm uninsurable.
What Ray doesn't realize is that he already holds the key to a policy that legally cannot ask him about his heart or his diabetes.
Exactly.
If he had gone to the VA instead of a private company, his application would have been approved the same day. His family security wouldn't have depended on his medical chart.
And the tragedy of Ray's situation isn't his health, it's the information gap. If he had enrolled when he first started looking, his premium would have been permanently locked in at a much lower rate, and his wife would be fully protected right now.
If you're finding these discussions helpful, please subscribe to Veterans Briefing so you never miss important updates and practical information for veterans and their families.
So we have to look at the structural mechanics of how the VA pulls this off. Because anytime a program offers guaranteed acceptance and 0 medical exams, the immediate question is always about the fine print.
Oh, definitely. If I'm an actuary looking at this program, I'm sounding the alarm. You are insuring 70-year-old veterans with severe health conditions for a flat rate asking 0 questions.
Right.
How does this program not collapse into bankruptcy within a month? There has to be a structural safeguard in place?
There is, and it's the 2-year waiting period. This is the catch the veterans really need to understand.
Okay, lay it out for us.
When you apply for VALife, you are approved immediately, and you begin paying your monthly premiums right away. However, the full $40,000 death benefit is not available to your beneficiaries until you have been actively enrolled and paying premiums for 2 full years.
Ah, okay, so that 2-year buffer is the mathematical necessity that keeps the whole thing afloat.
Yep.
Without it, you'd have extreme adverse selection.
Adverse selection is the nightmare scenario for any insurance pool. Without the 2-year wait, a veteran could literally wait until they are admitted to hospice care, sign up on their smartphone, pay a single $50 premium, and have the VA pay out $40,000 a week later.
Which would bankrupt the program overnight.
Exactly. The program would hemorrhage millions of dollars while collecting almost nothing to fund those payouts. The system would implode. So the 2-year waiting period forces a baseline of contribution to the pool, which is the only way the VA can offer guaranteed acceptance to everyone else.
But to be clear, this isn't a scenario where the VA just pockets the veteran's money if the worst happens early. The rules are very specific about what happens if a veteran passes away on, say, day 400 of that waiting period.
Yeah, the caveat is incredibly fair. If a veteran dies during the initial 2-year waiting period, the family does not get the full $40,000, but they also do not walk away empty-handed.
Right.
The VA will return every single dollar of premium the veteran paid into the policy, plus interest.
Wow, so it functions almost like a forced savings account for those first 24 months. The money isn't gone, your family is made whole with a little extra on top.
That safeguard should give veterans a lot of peace of mind. But this structure also introduces a massive strategic consideration regarding when to apply.
Oh, for sure.
Because many veterans think they can outsmart the system. They think, I'm in decent health at 65. I'll just wait until I'm 75 to apply. I'll save 10 years worth of premium payments.
Wait, so if a veteran thinks they are being smart by holding off on paying premiums until they are older, they are actually shooting themselves in the foot twice.
Yeah, waiting is a severe double penalty.
Okay, let's break that down.
Let's look at the actuarial math behind the first penalty, which is the locked-in premium. With VALife, your monthly premium is determined by your exact age at the moment you enroll. Once you lock that rate in, it is frozen forever. It will never go up, regardless of how old you get or how much your health deteriorates.
Let's explain how that locking mechanism works behind the scenes, because it's fascinating. When you buy whole life insurance at age 60, the premium you pay is actually a bit higher than the true statistical risk of you dying at age 60.
Right.
But it's much lower than the true cost of insuring you at age 80.
Exactly. You are essentially overpaying in the early years to subsidize the extreme cost of the later years. That's the time value of money. The insurance company, or in this case the VA, takes those early premiums, pools them, and earns a return on them over time.
And that accumulation is what allows them to keep your bill flat when you are 85 and statistically very likely to pass away.
Spot on. So if you delay enrolling until you are 75, you haven't given the system any time to build that subsidy. Therefore, the VA has to charge you a significantly higher permanent monthly rate to make the math work.
Every single birthday that passes before you apply guarantees that your permanent monthly bill will be higher for the rest of your life.
That's the first penalty of waiting. You permanently reduce your monthly cash flow in retirement. The second penalty is the clock on that 2-year waiting period.
Right, because that clock doesn't care about your health. It only cares about your enrollment date.
Exactly. Every month you delay submitting the application is a month further away from your family having that full $40,000 shield.
And there is a hard stop on this entire game. You cannot procrastinate forever.
The cutoff is strict. You must be 80 years old or younger to apply for VALife. The moment you cross your 81st birthday, the door closes permanently. You are locked out of the program.
Wow. So if you are a veteran in your late 70s listening to this, you don't have the luxury of putting this off until next year.
Not at all.
The calendar is quietly making the choice for you every single day. Letting the one life insurance benefit designed specifically to accommodate your disabilities slip through your fingers over a single birthday is a tragedy we want to prevent.
That urgency is real. But we also need to clear up some administrative baggage that might be paralyzing older veterans. The VA has a history of changing acronyms, and a lot of veterans from the Vietnam and Cold War eras remember applying for a different program years ago.
They remember the old Service Disabled Veterans Insurance Program, or S-DVI?
S-DVI was the standard for decades. If you are an older veteran, that's probably the acronym burned into your memory. But S-DVI is now permanently closed to new enrollment. It has been entirely replaced by VALife.
And we should talk about why that replacement happened, because S-DVI was incredibly frustrating for a lot of veterans. The rules were extremely rigid.
Oh, very rigid. S-DVI had severe timeline restrictions. Generally, a veteran had to apply within 2 years of receiving their initial service-connected disability rating.
2 years?
Yeah. And if you were dealing with the chaos of transitioning out of the military, managing a new disability, or just trying to keep your head above water, missing a 2-year administrative window was incredibly easy to do.
Thousands of veterans missed that narrow window. They got their denial letters, got frustrated with the bureaucracy, and assumed they were banned from VA life insurance forever. They still carry that assumption today.
That is the most critical misconception we need to break today. If you missed the boat on S-DVI a decade ago, that closed door doesn't matter anymore. VALife tore that entire structure down. There is no longer a time limit based on when you received your rating. Whether you got your rating 2 months ago or 20 years ago, the door to VALife is wide open to you right now, up to age 80.
But what happens to the veterans who did manage to get an S-DVI policy before it closed? If someone has an active S-DVI policy right now, What other options?
They have the option to transition over to the new VALife program, which often provides better coverage limits, but this requires careful navigation. Transitioning to VALife will eventually terminate your old S-DVI policy.
Okay, so they need to be careful.
Right. Because of that 2-year waiting period on the new VALife policy, you don't want to accidentally create a gap in your coverage. Veterans need to go to the VA website and read the specific transition rules to ensure their family remains protected while the new policy matures.
Well, navigating benefits is complicated enough, but we also have to address the predators out there.
Oh, yeah.
Anytime there is a government benefit guaranteeing payouts to older veterans, an entire cottage industry springs up to exploit it.
The predatory practices in the final expense insurance market are staggering. Private companies purchase mailing lists of veterans and flood their mailboxes with marketing materials designed to look like official government documents.
It's sickening.
They use official-sounding fonts, they slap bald eagles and American flags on the envelopes, and they use terms like veteran final expense entitlement.
They design it so a 75-year-old veteran opens it, thinking it's a mandatory update from the Department of Veterans Affairs. Then they get on the phone with a fast-talking sales agent pushing a high-pressure pitch.
And those private policies are almost universally terrible deals. They charge exorbitant premiums for incredibly low coverage amounts, and a massive chunk of your payment goes straight into the sales agent's commission check.
How do veterans protect themselves from this?
By bypassing the middlemen entirely. Do not engage with mailers or cold callers selling veteran life insurance.
None of them.
The VA does not use third-party brokers for VALife. You apply directly through the official Department of Veterans Affairs website. It is a completely free application.
And because there is no medical underwriting, you aren't filling out endless pages of health history or hunting down doctor's notes.
Exactly. You log in, confirm your eligibility, name your beneficiaries, and lock in your premium rate. No commissions, no aggressive sales tactics, just direct access to your benefit.
Let's bring all of these threads together and recap the top 3 takeaways you need to arm yourself with today. First, VALife offers guaranteed acceptance with absolutely no health questions, and you are fully eligible as long as you have any service-connected rating, even a 0% rating.
That's right.
Second, there is a 2-year waiting period before the full $40,000 pays out, but your family is protected by a full return of your premiums plus interest if something happens before that clock runs out.
Exactly.
And third, your monthly premium is permanently locked in at your exact age right now, and you absolutely must apply before you turn 81. Every single year you delay is permanently raising your cost and delaying your family's protection.
The most practical action you can take right now is to go directly to the VA's official life insurance webpage. Even if you aren't ready to submit an application today, use their premium calculator.
Great advice.
Take 5 minutes to input your age and see exactly what your permanently locked-in rate would be. Knowing your exact numbers is the first step to making an informed decision for your family.
And take a moment to think about the veteran network around you. Maybe an uncle, a neighbor, or someone you served with who gave up on getting insured because of their health. Share this information with them.
Please do.
They are exactly who this system was engineered to protect, but they will never benefit from it if they don't know it exists.
We want to hear from you as well. Have you navigated the VA life insurance system recently? Are you trying to figure out the transition from the old S-DVI program? Drop your experiences and your questions in the comments below.
Yes, definitely.
Creating a space where veterans share real practical knowledge is how we beat the information gap. And if you found this discussion valuable, please subscribe to the channel so we can continue bringing you the facts you need.
Before we wrap up, I want to leave you with a thought on how this program reshapes the way we view disability. We live in a society and an insurance market that constantly penalizes damage. The private sector looks at a veteran's injuries and sees a statistical liability to be avoided or priced out. But VALife does something remarkable. It takes the very evidence of your sacrifice, that 0% rating, and turns it into your exclusive qualification for security.
It really does.
It is a radical reimagining of value. It views your service-connected condition not as a deficit, but as a masterclass in how society should honor its obligations. That paperwork sitting in your drawer isn't a rejection, it's a foundation. It's yours, you earned it, and it has the power to shield your family on the hardest week of their lives. Thank you for watching Veterans Briefing. Take care, stay informed, and we'll see you in the next episode.